Is the Fed right about inflation rising yet again? We just got a CPI print that is higher than previous months, 0.3% higher month over month, 2.7% year over year. So it is increasing. And I've invited a perfect guest to discuss what the CPI print means. What has the Fed to do, or what will the Fed do in about 2 weeks? It's Axel Merk. He's the founder of Merk Funds and Merk Investments. Really looking forward to catching up with him, an absolute expert in that field, and really looking forward to quizzing him also on the succession plans that we've been hearing about at the Fed. So lots going on. By the way, my name is Kai Hoffman. I'm the @JR Mining guy over on X, and of course, your host of this channel. And as you can tell, I'm currently traveling. I'm sitting in a camper van, and please bear with us if there's some technical glitches, but I think we should be doing all right. I've been testing it, and technology is awesome if it works. So thanks so much for being patient with us here, and don't forget to hit that like and subscribe button. Helps us out tremendously. Now, Axel, it's great to have you back on the program. It's good to see you again. Thanks so much for joining us.
Great to be with you, and to take the punchline away, I think we'd be best served all to join you in your camper rather than talking about the Fed.
Absolutely. No, it's they're better topics. Looking outside, the sun just came up an hour ago. It's absolutely stunning, but we do have to talk about the markets and the reaction perhaps as well.
Axel, part of that, I'm actually semi-serious because we have talked, the market has focused much more on the executive orders of President Trump than the Federal Reserve, and I think for good reason. Fed Chair Powell has admitted as much. He doesn't know what to do. I mean, he says it in fancier words, but the data are all over the place. You just mentioned the CPI print came in a tad stronger than expected, but core inflation is all right. I mean, some of the tariffs are seeping through, but none of that really tells us much of what's going to happen. And this Fed, which I've called the debating club, is late in the best of times and is like a deer in the headline. And based on their process, they just can't do anything. And so they're just stuck here. Unless the economy falls apart completely or inflation is surging, their process just tells them to stay put. And none of that makes anybody happy, least of which Il Presidente.
Yeah, no, he's definitely not happy, and we'll get to that in a second because I want to talk CPI real quick first, just to set the scene, Axel, and then we could talk about like Fed succession plans and just the pressure on the Fed in general. Because I prepared a screenshot here to share with you as well, Axel. But dissect the CPI print with us real quick. Yeah. How much of that is tariff induced, and how much is part of that sort of a direct effect of the executive orders that sort of dictated the tariffs here?
So first of all, the year-over-year headline inflation came in at 2.7%. Expectations were 2.6%. So it's a tad hotter than expected. The excluding food and energy, it came at a 2.9%, which was also as expected. Yes, that has some tariff push through. The challenges, of course, we're coming still from the backdrop of the great inflation. And in that environment, inflation is no longer linear. So even when things are good, you never quite know what the next print is going to be. And that is really a big part of the challenge. And it's all worsened by the fact that the economic data are partially not there, in part because of the DOGE job cuts. There actually some numbers don't get, or some surveys don't take place anymore. But even when they are available, because we've had tariffs on, tariffs off, this and that, we don't quite know what that means. And then on top of that, of course, we have this big deregulation push. When you're the Fed, you cannot conduct policy, at least not the current Fed, based on projected policy. So you've got to read the tea leaves like everybody else. But the tea leaves are not there. Aside from the economic data, they've intervened in the markets over the years so much that some of those numbers are distorted. And so, yes, in the tariffs are coming through a little bit, but to what degree is also somewhat difficult to say. And more importantly, it's difficult to say what's going to happen medium term because we still don't know what the tariffs are. Now, in my book, President Trump likes tariffs. From the get-go, I thought he'll put 10% tariffs across the board, and then maybe some punitive tariffs with some, and maybe a tad less with others. But that does have an impact at least once, right? Once you introduce the tariffs, doesn't mean inflation will be permanent. But it decreases the efficiency of conducting business. Obviously, the whole point of decreasing the efficiency is that people produce more in the US, and they are the carrots, as I call them, come more into play, such as deregulation versus the stick approach, which the tariffs are.
Yeah, it also comes down to like, does the consumer even want to pay more? I think there was a test, like one online shop ran a test, like you can pay either, I don't know the prices exactly, but you for a US made product you can pay $50, or a foreign made product you can pay $30 for. And I think only 2 out of 500 or so ordered the more expensive product as well, which I thought was interesting because the consumer is very price sensitive, especially in these times where, as you said, like unemployment is rising and we're nearing a recession.
Yeah, I mean, a few days ago, I just had a discussion with my youngest about ordering things on Amazon versus going to your local bookstore, discussions that I thought would happen 20 years ago. Fact of the matter is, people buy stuff on Amazon, right? And good for those who still go to the local bookstore, but the consumer likes to click a button rather than to go out. And that's the landscape is changing. And the same happens, of course, with any changes, AI these days or whatever it may be. Except you alluded to it. We'll talk about it later, I suppose. We talked offline about the drive to have companies invest in the U.S., including sourcing strategic minerals domestically.
No, it's an interesting topic because now we've got August 1st as the new deadline for a lot of tariffs to kick in. Brazil is a big topic here. Indonesia, I just read this morning. EU's got sent a letter as well. Do you still have an understanding or an overview, Axel, of like who's being tariffed what and what the impacts will be? Like Brazil, for example, coffee prices might be rising, which might directly affect you as well, Axel. So I'm curious, like, do you still have an overview of how that will be seeping through?
Of course, I know every detail. No, I mean, that's why President Trump likes to have 10% tariffs and the rest is negotiable. And I think that's somewhat how the market looks at all this. We will get all these nuances and all back and forth. Part of the reason, by the way, there's a stumbling block with the EU is that the EU says, well, we can agree on tariffs, but who says you're not going to change your mind 2 weeks after we agree on anything? And of course, unlike Trump, the rest of the world is run by bureaucrats, the EU most famously, of course. And so, I mean, businesses ultimately foreign business like to operate in the US, and US business like to sell abroad. And they'll find a way of doing it. And there will be a lot of back and forth because when you have these blunt instruments like changing tariffs on a weekly basis, the businesses will either not invest or not ship something, or they'll find other ways around the rules. And so we'll see how this all settles. What I also know is the midterm elections are coming up in a year and a half. And so we will put the tariffs behind us sooner rather than later and focus more on the incentives. So we can scratch our head of whether Indonesia now has 19% tariffs. And apparently the headline is that Indonesian goods will be subject to tariffs, but American goods to Indonesia will be tariff-free. Let's try to focus on the big picture when we have so much noise. And the big picture is that, yes, there is quote-unquote strategic uncertainty. Apparently that's a new term. And that's supposed to be a good thing. I think it's more relevant that we'll get extensive cuts on the regulatory side and some other incentives. The question is, are these incentives going to be significant enough in meaning that they'll outlast the current administration? And by the way, the reason why entire departments get dismantled in this administration is to make it more difficult to resurrect the bureaucracy when the next administration is in. And so it's that sort of thing, I think, that's more important than what the mood of the day is, whether the tariff is 20% or 30% or 10%, and whether we'll get our maple syrup from Canada or we don't.
Now, it's an interesting tool that President Trump has been using, obviously, the tariffs here. But maybe, Axel, I'm going to ask you to be a bit of a psychologist here as well, because taco is a word that's been trending over the last 6-8 weeks here. How much has President Trump's ego been hurt here? And like, what are sort of the ramifications? Because I'm pretty sure he doesn't like that term, and now he's showing the world that the term doesn't exist or shouldn't exist, I think. Does that play a role in that at all, that he's pushing through with his tariffs and the tariff threats?
Well, he reasserted authority with a strike in Iran very clearly. And I'm not suggesting that was done in reaction to that term. Um, Beyond that, clearly it's a negotiating tool. Clearly, the idea is to control what the media talks about. But ultimately, President Trump believes in tariffs. He believes that tariffs are a tool to help to reindustrialize. And that's why we'll have a 10% baseline in tariffs, almost certainly, in my assessment anyway. To me, the one thing we're not talking about, and I think we may have talked about it when I was with you before, we talk about the goods all the time, but the other part of the equation is the flow of money. And when you impede the flow of goods, you're also impeding the flow of money. In my assessment, a good reason why long-term interest rates have been elevated is because of the tariffs, because deficits need to be financed more domestically. It's one of the unintended consequences of tariffs that I don't think we should neglect.
No, it's an interesting one because money has been leaving the U.S. The DXY and the dollar has been weaker due to a lack of trust, but now trust seems to be returning a bit because DXY up back to 98.6 actually this morning, my morning as we speak, Axel. But where's that strength coming from? Like, where is there trust returning towards the U.S. here?
I'm reluctant to use words like trust because we know the flows, right? The why we can muse about, but is correlation equal to is correlation and causation, like which one is which? In my view, in my prism, the tariffs impede the flows, and so obviously when there was Liberation Day, the market first jumped on this thing. Oh my God, these tariffs are going to be tremendous, and then since then that's been receded, and credibility has somewhat eroded. You mentioned that taco reference. I come back to the saying that ultimately we'll settle at some level of tariffs, which I think will be around 10%, which I do think will have an impact. But yes, the market gets used to things, and we also have the tax package that's passed, and so there is more clarity. The one thing the market doesn't like is uncertainty, and so you can like or dislike the tax package. You can like or dislike the tariffs. It's for us to quote unquote deal with it. Regarding trust, I wouldn't frame it in terms of trust, but I do think when you inhibit the financial flows, you inhibit the exorbitant privilege that the US has. This mechanism that the US is like a giant bank where you borrow cheaply in the US in seek of greater returns abroad. And one of the things that's been said is that the reason why the US will continue to be the reserve currency is because there's no alternative. I fundamentally agree with the fact that there has to be an alternative. I see increased fragmentation in the world, and that will just inhibit trade or business in general. That doesn't need to be an alternative. Now, again, Trump is pragmatic, right? If he were to see issues, he can fix it. He'll strike a deal or something. And so when I say that that financial flows are inhibited, it's on the margin. There are changes. The other noteworthy part about all of this, though, is you talk about trust. A lot of the views that your guests talk about, that I talk about sometimes, they're moving from the fringe to the mainstream. And that can create a dynamic of its own. And I don't think anybody knows the timing of that when the concerns about deficits and whatnot are becoming more serious.
Yeah, maybe to summarize the tariff conversation, is like, what's your stance in general, Axel? Like, are you pro tariffs? Are you against them? And do you think they will have, what do you call it? I would call it a healing factor, but do they have a chance to help to decrease potentially the government deficit here?
Well, it doesn't matter what I like, right? I don't call the shots. There is ultimately, if you take a global economy, if you have less tariffs, you have more efficient economy and more growth. Now, from a political point of view, that may not be acceptable because you don't want all that growth to happen in China, right? And so it is very understandable that governments introduce rules to the game to try to fix what are perceived to be bad policies. And I get that, right? I happen to think that the far better tool are incentives, cutting red tape, tax policy. The reason I don't like tariffs is because they build the swamp rather than drain the swamp. And you see that not only do lobbyists have a gangbuster year, you're literally asking for an exemption and exception for every single thing. And that just leads to bad practices, including bribes and whatnot. And I'm not alleging that's happening right now, but that's the sort of environment we are fostering. I'm a big believer in simple rules. Now, if you have 10% tariffs across the board, that would be a simple rule. I'm not a big believer in kind of juggling that for each party. But of course, President Trump has a very different philosophy, and he wants to strike deals with everybody, and good for him, right? And a lot of people are giving him the benefit of the doubt, let him do what he wants to do. I happen to think that clarity of policy is tremendously important for investments, especially for long-term investments. And by the way, I include in that, I go far beyond what any president typically talks about. I include in that fiscal sustainability. Why would you invest in a 20-year project when you don't know where government finances is going to be in 20 years? If government finances are going to be in disarray, the government is going to take the money from you, either through taxation or inflation. And so I happen to think that and by the way, I mentioned that the tariffs inhibit financial flows. Well, if you're a believer in tariffs, the way to address that is not through pressure on the Federal Reserve, but by getting your house in order, meaning entitlement reform, fixing your deficits. Now, a lot of that is wishful thinking, and it's not going to happen. But if you're asking me for my view, it's to me, you try to get the basics right, and the rest has a much easier time to fall into place. Now, getting the basics right is much easier said than done. But in practice, the politicians then always try to fix the unintended consequences and make it worse.
Yeah, it's a question of whether the voter wants to change the entitlements as well, like whether the voter is interested in that as well. Trump has potentially, after the midterms, a chance to rectify some of it because he doesn't stand for election afterwards. So, but he probably wants to pave the way for J.D. Vance or somebody else to take his place and continue his policies. But we need a Javier Milei moment in the West in general. I'm not saying the West, but the West.
There's a great book called The High Cost of Good Intention by Cohen, I think is the author's name, who talks about the history of entitlements. And it's a pendulum that swings back and forth. But whenever it swings towards kind of reduction of entitlements, fiscal austerity, it swings only a tad and then goes all the way again in the other direction. And as you point out, right, when politicians are elected, they want to promise people things. And we do know that the one thing policymakers listen to is the bond market. And arguably, the US has more leverage there than most other countries. And so I'm not too optimistic that that will fix our entitlement issues anytime soon.
No, that's a tough one. I don't think that'll happen. But bond market would, just for reference, 10 years, almost up at 4.5% again, the yield, which is really interesting. And curious, like maybe just a small rabbit hole to jump into, Axel. I don't want to talk bond market, but any interpretation of why the bond yields have jumped I'd say dramatically, because we were at 4.25 earlier, not just a week ago, and now we're back at 4.5. They're rising. Any interpretation?
Well, my prism is it's tariffs. Tariffs inhibit financial flows, and that means that deficits have to be financed more domestically. We obviously have a big supply of that, and that's the end of that, right? You can also argue that the Federal Reserve might be stuck where they are, but we've jumped out of that zero interest rate environment. Now, the positive interpretation, if one wants to use that, is that the growth potential has increased because of the policies of the administration, and there may well be some to that. I do think the cutting of red tape has been significant, and there's a lot more that can be done and may well be done. So I think that there's potential here for more growth, and when the growth becomes more structural, that can lead to higher long-term rates as well.
I was going to swing back to the Fed, Axel, but you just opened the can on growth, which is a way more exciting topic than the Fed, and that's why I want to cover it for a second. Where do you see growth coming from? Like the red tape's being cut, of course, but where do you see growth coming from, Axel?
Well, currently, I think Neil Ferguson, economic historian, he pointed out that we are investing as much, we as a economy, into AI as last happened when there was this investment in the railway system in the US. It's over 10% of GDP or so that is being deployed. That's a huge investment into the future. Now, that doesn't mean every AI investment will pay off. I mean, if the comparison to the railway, right? Most of these don't do so well these days, but it spawned other industries and a lot of growth. And so, in some ways, I actually feel that we're closer to the late 90s than anything else. Now, of course, it doesn't mean that we can't have a further slowdown with some of the things that are happening in consumer being tapped out, and there will be some amazing transformations that are not so amazing when you lose your job, type of thing, right? But but I do think that a lot of investments are taking place where everybody has a fear of being late in the AI bandwagon, and businesses are spending a fortune on that.
No, interesting. Like AI, of course, the new frontier, which is interesting. No, I appreciate you humoring my question there about growth, which is interesting. It's way more fun to talk about the Fed, but we do have to talk about it because I've queued up a screenshot, Axel, for you because I know you're a Fed expert. It's a statement from the chairman of Fannie Mae and Freddie Mac, William Polta, and he reports on Jerome Powell considering resigning. Like I find that statement itself just interesting. Like, why would the chairman of the U.S. Federal Housing just make a comment like that, Axel? Like, help me understand this a little bit. Maybe you can help me frame it. And are there any like ramifications coming out of a statement like that?
A lot of, let's call them second tier people in the administration have been vicious about Powell, and this is just the latest of those calls. Let me first make a broader comment as to whether it matters. Fed policy, one of the key reasons why Fed policy should be independent is because it's cheaper. When what the Fed chair says is credible, then Powell can utter a few words and the markets will be moving. If there's credible interference, then the Fed might need to lower rates, engage in QE or whatnot to achieve the same. And so, from that point of view, agree with the Fed or not, it's incredibly important that the Fed is quote unquote independent. You can measure the confidence in the Fed by looking at things like long term inflation expectations. Those are pretty much in line. On occasion, when Trump speaks up, there is a tiny bit of a move. Now, of course, the Fed, again, this doesn't say what I like or dislike Fed. The Fed has always been a popular punching bag. When something goes wrong, might as well blame the Fed. And that's very bipartisan. The Democrats have done it, Republicans have done it. And of course, President Trump is very media friendly, so it's not surprising that it's exacerbated under him. And yes, some of these things, like the head of Fannie and Freddie calling for resignation, may apply. Now, when you first showed me that headline offline, I didn't mention it then, is I actually thought Polter was thinking of resigning himself rather than asking for Powell to resign. And the reason I said that is not because I'm saying he's doing a good or bad job, but because I have a fundamental problem with how Fannie and Freddie are run in general. I do not think the government should be in the mortgage market. And this government, like any other government, has chickened out on that decision. They sometimes, the Trump administration, talking about privatizing it again, or more, but the government needs to get out of the mortgage market. So when I first saw that, I was confused, but I'm not surprised at all that there are periodic calls for Powell's resignation. It's good politics. It's bad policy, but very good politics.
Yeah, let's spend one last minute on the Fed here, Axel. I'm just curious, like if Jerome Powell were to resign, like what do you think the outcome will be? Obviously, Trump is pushing for lower interest rates, and he probably install somebody who will fulfill his wishes here. What is the outcome? What's the outcome for the market, but also for Joe Blow? Like, are the mortgage rates going to be reduced? Are they going to come down?
No, if Powell, first of all, the expectation is that he's going to step down in a year from now, or in May, I think it is next year when his term as chair is coming up. He's almost certainly not going to stay on as a governor afterwards. Fed chairs don't usually do that, and so it's nice theater. If he were to be kicked out one way or the other, be that for this extraordinary spending on the Fed building, which, by the way, was approved in 2021 already, that I think would be seen extremely negatively by the market as interference on the Fed policy, and interest rates would be soaring as a result of that. So I don't think Trump will ultimately do it. I think it's a terrible, terrible idea. I think the more interesting discussion is who will succeed Powell. And to just jump onto that briefly, of the candidates, the one candidate that would actually reform the Fed is Kevin Warsh. Reform the Fed within the confines of the existing law. Kevin Warsh has been outspoken critic of the Fed for several years, criticizing the decision-making process, criticizing the communications process. And by the way, one of the things he's given speeches about is how the Fed should use real-time data for decision-making as well. And it's the latter part that might make Trump decide to actually have him. As many of your listeners presumably know, as Kevin Warsh is known as a hawk, but he is also somebody who would change the conduct at the Fed and get them to react more quickly. And in a situation like right now, where the current FOMC is literally like deer looking into the headlights, he would be able to get the Fed to act, and in this case lower, which would be consistent with what Trump wants. Kevin Warsh would be independent. It would be a terrible idea, putting somebody in place who's not, because you talk about long-term rates. Long-term rates would be much higher, and that would not be in the interest of the U.S.
Yeah, I can't believe that trust will stay elevated in the U.S. debt system or financial system if that really happens, because it just undermines everything that is going on. Axel, really appreciate those takes. I want to switch topics real quick because you're an expert in mining, of course, as well. And we've just seen a really, really interesting deal. The Department of Defense investing $400 million into MP Materials. I just saw yesterday, my time, that Apple is also intending to invest $500 million into MP Materials to secure rare earth access. Elaborate on that a little bit for us, Axel. What does that mean? What is your perspective on it? And is the government finally catching up to what other countries like China have been doing for decades?
Yeah, so we do manage currently about 2.4 billion in gold and gold mining, and have a keen eye on strategic minerals as well. Apple's move is under pressure from the Trump administration, and the idea is, of course, that one is not dependent on China. Very understandable. Rare earths aren't all that rare; they're everywhere, but mining them is a pain in the butt, and so. The question is how to achieve that. You can try to reduce imports with tariffs, and of course you can try to incentivize domestic production. One of them is by putting pressure on companies like Apple, or what has been done now is a capital injection with preferred equity, providing cheap financing. There are various ways of state industrialism. I would call this a light touch version. You can have much stronger interference from the government. This is if one believes in industrial policy, and we are certainly there's a global wave towards more industrial policy, providing low cost loans, preferred equity, capital injection, all the sort of things that I think are more on the constructive side and less detrimental side. And the question again is, how do you do this so it survives the current administration? And I think the idea of providing cheap capital is an important one. The other one, of course, that can be done is on the permitting side. That can be greatly accelerated. That's usually what holds up these projects and makes them tremendously more expensive.
Absolutely. No, it's an interesting topic. Actually, I could talk with you for hours about that alone, because copper is another one we should talk about, but we're unfortunately out of time, Axel. But where can we send our audience to follow your work?
You can follow me on Twitter at Axel Merk. MerkInvestments.com is our website. You'll see links to our products. We have a free newsletter there. On Twitter, I can't talk about products, but you can get my musings about the latest and greatest on the Fed, on money, on gold, and whatever else comes to my mind, for better or worse.
Fantastic. Axel, really appreciate you joining us. Thanks so much. And everybody else, thanks so much for tuning in here to Soar Financially from the road. Much appreciate you watching. Don't forget to hit that like and subscribe button. Leave a comment down below, and we'll be back with lots more here from Australia. Take care out there.